bring in Rob Morgan. He is Chief Investment Officer at Sethi. I know these weeks, Rob, are very busy for you and your team. It's not really about what they've done. It's their guidance. What are you and your team expecting to hear from corporate America?
Well, Brian, the expectations for this earnings season are not great. We're looking, if you look at FactSet, the estimates really are expected to be down in earnings growth for a third quarter in a row, and it's been several years since we've seen that. Looking out a little farther, though, the fourth quarter, which would be reported in 3 months, is expected to be a little bit better. And then many analysts are expecting that we might see a reacceleration in earnings growth going into 2020. But for right now, for this earnings season, expectations aren't great, and I wish I had better news to report to you, Brian.
Well, I mean, is that maybe a good thing for the markets, Rob? Because the market's job is to anticipate what's going to happen. The expectations, to your point, not great. The market has held up reasonably well. I mean, if your kid says, Dad, I think I'm getting a C+ in geometry, and they come home with a B-, it's not a great grade, but you still feel pretty good given the expectation.
Well, absolutely.
Maybe that's a little too close to home.
That's a very good point. It's a very good point. Yeah, right. Yeah. I don't know. I might have felt pretty good about a B- in some classes, But yes, I think you're absolutely right, and it's one reason why I continue to like stocks here because they're not real expensive right now, and if we do see that reacceleration in earnings growth going into next year, that could continue this long bull market.
You think it will?
I do. I think we will. I think we will see a real reacceleration in earnings growth. The Fed has continued to say they don't see a recession in the near term. Eventually, the business cycle is going to end, and we will get a recession. But I tend to take the Fed at their word, and I don't think we're going to see one next year. You've
been recommending overweighting the big banks, the financials. You've been right. I mean, that group was one of the best, I think maybe the best of the S&P 500 11 sectors last week, despite the fact that some of the big bank earnings weren't exactly spectacular. You remain optimistic on that group.
I do, and financials are kind of a microcosm of what we just talked about for the earnings of the market as a whole. The expectations weren't that great, and the earnings actually came in, not so great, but not terrible either, and so that's kind of driven the group forward.
What looks weak to you? Not to focus on the negative.
Right. Well, so when I look at sectors, I basically, for those that I like, for instance, banks, I like to see visible earnings growth, good technicals, valuation that's reasonable, and so for sectors I'm not crazy about, it would be kind of the flip side of all those things. And so right now I'm not really crazy about healthcare, industrials, or consumer discretionary.
All right, I think it's fair to say after last night, the banks to you are the Patriots, consumer discretionary healthcare are the Jets. Rob Morgan. Thank you.
Good analogy.
33-0, by the way. Rob, we'll see you soon. Thank you very much.